Okay, welcome guys. It's the end of the week. We made it. It was a busy one. We had US GDP, we had the Fed, we had Apple, we had Amazon, Intel. There's a lot going on. It's been hectic. I think I need a holiday, but luckily I have one coming up next week, so good for me. Now, I just started with with dollar yen here because of a big move in the yen overnight. This one has been a serious trend for the last most of this year, really, because the Bank of Japan has been trying to keep rates low. And obviously, the yield differential between the States and the dollar in particular has been pushing it higher. But we got some hawkish comments yesterday that we mentioned, and then we got some CPI overnight from Japan. And then with the US GDP number, this is starting to come down, which could pose a problem if it continues to do so, because CTAs and trend following systems just love this kind of thing. So any pullbacks, they probably add it to positions. So the deeper this pullback goes, the more likely we could see problems. And as well as that, with the Bank of Japan coming under increasing pressure to keep its rate control measures in place, it's just something to flag going forward that could be of interest. Now, going back to equities, we got a very strong performance from Apple and Amazon overnight. Apple was ahead of forecast. We see maybe a few issues in the margin side of things, which are not being picked up on. A few analysts this morning, we know, of picking up on maybe a slowdown in China, which could hit iPhone sales going forward. But overall, they were still pretty positive. Amazon was a massive relief rally, basically 13% overnight. Everybody was fearing another disaster. What happened the last quarter? Amazon Web Services very strong in the cloud business. Rivian saw a markdown, but overall it was a massive relief rally. So if we look at the S&P, this rally is still continuing. So we've finally filled the gap up to 401. Now the next resistance is 415. So we commented yesterday, equity positioning is probably still pretty low from fund managers and from hedge funds. So it could continue. This rally could continue up to 415. The Fed obviously pivoted some way dovish, which helped spur a massive rally. The only caveat we would mention is MOVE, which is bond market volatility. So the bond market is still trying to work out what exactly is going on in Fedland and what exactly is going on with inflation. Currently, they're probably pricing inflation to come down more aggressively than we think. But overall, bond market volatility is still pretty high. And high bond market volatility leads to high equity market volatility. And we are seeing a lot of choppy trading. This rally, we've had lots of massive up days and lots of massive down days, lots of days of 3 or 4% gains with like 90% plus of all stocks closing higher. And then we've had the same on the downside. We've had 3-4% losses with 90% of all stocks closing lower in the day. So the choppiness is probably going to continue based on just the way the Fed has kind of effectively abandoned guidance, I suppose, leaving it up to the market to determine what it wants to do. But overnight, we got some European GDP, which is probably better than expected, European CPI, which is probably worse than expected. That meant bond yields moved higher in Europe. That meant US bond yields moved a little bit higher from where they were yesterday. Dollar yen, we talked about. Oil is not doing a huge amount. It's largely flat in the day. It's still trying to work out what's going on with growth versus supply chain issues. And we got some of the oil majors, Exxon and Chevron, out before the market with record profits. Obviously, oil prices underpinning that. Bitcoin is a little bit lower. Bitcoin is very correlated to the NASDAQ and other high-risk assets at the minute. So it's just kind of basically following what the Fed lets it do. But overall, equity markets looking reasonably positive this morning based on, I suppose, Apple and Amazon and the continued move from the dovish Fed, which was added to by yesterday's US GDP. So we're set up probably for a high opening, but just adding in the caveat that we're coming to weekend and month end. So we may see some reverse position closing. But otherwise, have a good one and best of luck.